talking about changes to the environment and what's happened. And we had a really good discussion, actually, Jim and I, before we even jumped in here, just about what's happening in emerging markets, what's happening in the United States and around the world with the ability for entrepreneurs to get capital, especially underserved entrepreneurs. What I mean by that is that people that really struggle or have a hard time meeting a lot of the standards that have been placed upon us by SBA, conventional banks, but we still want to get the money. We don't want to pay outrageous rates on it. But yet we know we can't get it from some of these other sources. What's the solution? This is exactly what we're going to be talking a little bit more about today. So with us today is Jim Chu. Now, he's an entrepreneur and investor dedicated to creating shared prosperity by unlocking economic opportunity where it's needed most. And he's the founder and CEO of Untapped Global, a global investment company that offers profitable, data-driven opportunities for investors to finance high-growth businesses in emerging markets. Now, Untapped Global uses a technology-backed approach that reduces risk and increases scalability and profitability. Now, as of August 2022, Smart Asset Financing has financed 9,000 productive assets deployed across 13 African countries with a default rate of less than 1%. That's crazy. In addition, Jim founded a social enterprise in Haiti that provides clean water to over 200,000 people in underserved regions throughout hundreds of local entrepreneurs. He is on multiple nonprofit boards, including Watering Minds, a U.S. public charity supporting youth in emerging markets, and MCE Social Capital, a nonprofit impact investment firm as well. Jim, thanks for joining us today.
Thank you for having me.
So I love the discussion that we had before we even jumped in, and I really want to talk a little bit more about that because ultimately, what do you think? I mean, from what you've seen, and you're working around the globe, what are you finding in general in the current landscape of lending and business owners' ability to tap in and get capital?
Yeah, you mentioned in the intro that one of your missions is to help U.S. businesses tap into credit. And what's interesting is that the financing gap in emerging markets is far greater, far larger. And what I see all the time are really successful, interesting, profitable businesses that can't for the life of them get access to credit. And what I see is that a lot of that failure, that reason is because of the way underwriting is done and the way the financing sector is structured. Right? You have a lot of money using an underwriting model that requires a lot of collateral and security. And especially in emerging markets, that means you're only dealing with the top 2% of the economy that are formal businesses that have the wealth to even offer the collateral. I tend to joke, hey, if you want to borrow $100, that means you have to have $150 already in your bank account, or a house that's $150. And so that basically leaves out, especially in emerging markets where you have this massive growth of population, massive growth of entrepreneurship and wealth, but you don't yet have the people with all of those assets in place. And so you're leaving all of them out. It's interesting because we're here talking about the Fed and they're restricting the lending a little bit, and we see how big of an impact that has on our economy. Well, imagine in emerging markets, the majority, 80+% of the economy can't access that credit, and how much that holds the economy back. Or the inverse is true as well. If you're able to unlock even a little bit of credit for those economies, how much value and wealth can be created from that little bit of extra credit? And that's really the problem that we see and the one that we're trying to solve.
So let me ask you this. Why is this happening? I mean, there's so much data nowadays that we have. There's so much AI, there's machine learning, there's all of this tech and advancement that's helped us make better decisions in lending. And even if we had none of that, right? Even if no matter where I am around the world, I could tap into like Dun & Bradstreet, for example, and I can pull a commercial report on a lot of different businesses. And that's LexisNexis, and you've got Experian and Equifax, several which they're not even really out of the United States, right? I mean, a lot of people don't even realize that there's these credit bureaus all over the place. So like their whole job is to figure this out for us. Like their whole job of D&B is to gather all it's to sell data, but it's to gather all the data they can and then use their own proprietary algorithms to figure out the risk. So I feel like there's so much data and so many big people like the bureaus trying to help us assess risk. So why are lenders around the world so bad at this? with all the data and resources that are available to help them make better decisions?
Yeah, so let me answer that in two parts. I actually think in markets like the US, things are changing, maybe slowly because the finance sector is slow and has a lot of rules, and it makes sense that it does. But there's a lot more data now, and a lot more financial institutions are using that data for informing their lending, pricing risk, giving access to people that previously wouldn't have access. There's actually a great study from Bain Consulting that was published in September 2022 that talks about embedded finance in the US market. So basically, lenders who are providing finance, but they're actually embedding the finance in the e-commerce system or in a service or whatever it is. And some of the conclusions are that are really interesting. The main one really is that the whole value chain for the finance sector is being broken up and realigned, if you will, with embedded finance players playing a much larger role in lending. But one of the other conclusions is that data is changing everything. Access to data, and real-time data, that is, in particular, down at the small borrower level, is allowing some of these embedded finance institutions to reprice risk and lend to people who otherwise would not access credit. So I think it's starting to change. And maybe the second part of that question really is, well, why isn't it changing faster? Hey, look, we have a 500-year-old lending industry that really started with, Medici brothers in Italy in the 15th century with liens and paper and whatnot. And that's grown into a $1 trillion industry. That doesn't change overnight. So it will change. And you will have a gradual shift towards data-driven financing, but that's going to take time. Let me give you the other answer more specific to emerging markets, though. That is the data that you do have available in the US, Dun & Bradstreets of the world and so on, and the POS system data, all this stuff that's happening in the US, that is only starting to emerge in emerging markets. And so the data is actually there, but the infrastructure for capturing it and using it isn't there yet. And so what we see is this massive opportunity to take all this data that's being generated by the digital transformation in emerging markets in Africa, Southeast Asia, Latin America, et cetera, and use that data to redo or reshape the finance sector altogether, and really start to lend to all these small businesses that have been hitherto completely excluded from the finance sector.
So we see in the United States, for example, to your point, we used to see 90% plus of money came from conventional banks. It was SBA type back loans. It came from the big players like Chase, Bank of America, et cetera. And this started to change. Dodd-Frank, after the mortgage crisis, really changed it because the government really even required banks to be more conservative than they were. Now we see this explosion of alternative lending, fintech, online lenders, alternative lenders, doesn't matter what you want to call them. These lenders that focus on one strength of the business, like their consistent revenue, instead of having good personal credit, good business credit, good financials, good collateral, all the other stuff that the other banks have always required. Are you seeing that in emerging markets? Has that trend? Because it's explosive. Now we've just seen a flip, right? Like 90% of financing used to be conventional banks. Now it's clearly alternative lending. Are you seeing that in emerging markets? Has that started to make its way to other places around the world?
Not enough, but we're leading the charge, we hope. Right? I think the thing that we're aspiring to do as a company is to really create that data platform and capture the data that is out there in the market, but isn't being utilized today for credit and underwriting management. And so part of I think the massive opportunity is to do that in a way that bridges the traditional finance sector in emerging markets, because they're there, and this new alternative lending finance sector that is really just emerging. And some of this is just really about language and translation and packaging, right? The larger institutions, they need to follow certain rules, just like in the US. They have a certain language, they have a certain culture they need to follow, if you will. But this whole new world is just weird and different. And so part of what we're doing is translating that. Another part of what we're doing is really solving some very practical issues around this. I call it the asymmetry of scale problem. a lot of the financial institutions, especially global ones, they want to deploy tickets 100, 200, 300, 500 million at a time. Anything less than that, they don't get out of bed. But a lot of the need and the real high yield opportunities is in the 3, 5, $10 million investments. So how do you actually bridge that gap? Now, obviously, one way is to aggregate, right? Create a little fund. You can pull all these guys together, but then you lose some of that data piece. And so what we're trying to do is to actually create that aggregation and bridge the gap with data. So we're consolidating all this data from all these different companies and SMEs, normalizing that data set. So now a much larger institutional investor can see all of this data down to the $2,000 loan, but see it in a singular form, in a singular format that they can run through their algorithms. So I think it is happening, and I hope to be leading the charge.
Yeah, I love that. And one of my really good friends does the same thing, more on the military side, where it's just massive swaths of data that they're able to break down into really usable formats used by a lot of places, special forces including.
Right.
So I love the fact that you're doing that with the lending arena, because we've clearly seen that shift, and it's good that is actually carrying through. But on your end, is it private investor? Is it institutional money? Because this is another trend that we see in the United States, right? And what I mean by that is that we always used to be credit unions, used to be banks, used to be big financial institutions that maybe even plug into hedge funds or whatever it be. Now we see this explosive growth of private individuals investing into privately owned companies. We see equity crowdfunding coming around, and the ability for people to invest without being accredited investors, right? So we're seeing these barriers be broken down, where average everyday people can invest into privately owned businesses. And people seem to be loving it because they're just upset about the stock market, right? Not to get off on a tangent, but like my parents are retired and they're freaking out because like 20% of their worth, right, of their 401k, it's down, right? It's just, and they're now on a down cycle as they're into retirement, right? So we now start to see more people get fed up with that system and want to invest in privately owned companies. And we start to see channels like equity crowdfunding opening where it's easier for them to do it. So what are you seeing there? Like, what are you working with, and what are you seeing on the trend versus like institutional money versus now we see this trend in the United States of more private individuals jumping in?
Yeah, that is such a good question, such a good point, Ty. I think there's a complementary revolution happening on the other side, just like you say, right? There's this revolution in digital investing that we've seen a lot of ups and downs in the last few years. Let me just go back in the way I see history. You know, I see a very direct, clear line between talking to your stockbroker in the 1950s on the golf course as a white male, all the way through to Charles Schwab with discount brokerages, all the way through to Robinhood with access free, trading for everyone, all the way through to Web3 and crypto investing. Right. It's a constant democratization of investing, and it's all tech enabled. Right. Technology is allowing more investors to do it at smaller ticket sizes so more people can be involved. Now, unfortunately, well, I think what happened with the Web3, and this is really timely discussion, obviously, with FTX and everything else that's happening, there's a lot of scam stuff going on there, had been happening. But I think one thing that it showed is that there is a real thirst and hunger from the general population to invest in something other than putting your money in a bank and getting 2% interest. I'm not a conspiracy theorist, but I think there's a big scam out there from the big banks. Like, hey, you know what? Come and put your money with me. Or if you're a private client with one of the large banks, come and invest with us. They take your nice 2% for managing your money, and then they sell you financial products that get you maybe a mid-single digit return, and they take another 2% on the other side. At the same time, the really wealthy families who have 10, 20, 30, 40, 50 million, that wherever they put their money, they're getting high double digits simply because they can access these alternative investments that your layman cannot. And so I think what's happening is there are more and more of these alternative investments that are possible with technology. There's a great company out of New York called Percent. What do? They take institutional bonds that are only previously available to institutions and allowing fractional investments in those through an online platform. And so now, you have to be an accredited investor for various compliance reasons. But as an accredited investor, you can go in and put in as little as $500 and invest in an institutional grade bond. That couldn't happen 10 years ago because the technology wasn't there. So that is changing everything. Whether it's Web 2 or Web 3, it doesn't really matter. It's really the technology of allowing smaller transactions to happen. That's changing who gets to invest. So I see the two sides coming together in a very clear way in my mind. The ability to invest in small businesses in a way that is much more accountable, transparent, and data-driven. And people on this other side who are investing in a much more digital way and bringing those two sides really closer together by allowing investors in the US and Europe, wherever, with the money and looking for the double-digit yields, being able to put their money more directly into a small business in Africa that is giving them those double-digit yields. So I see that revolution happening in emerging markets in particular, because that's where the biggest opportunity is.
And I want to talk about that from the investment side, because you make a really good point. And this is what I've come to realize. I think like a lot of entrepreneurs, I need to exit for X amount of dollars, right? For retirement, blah, blah, blah. But then what I've come to realize is that like, that's really stage one. Like it's so much easier to 10 or 100X, whatever your money is when you have the money. It's kind of astonishing at how many opportunities are thrown at you for, like you said, for double digit, if not high double digit returns when you actually have the money to invest. It's kind of astonishing. Like people that don't have access to the capital just cannot get good returns on their money wherever they're put it in a lot of cases. But people that have the money, they're getting exponential returns on their money. And they don't, the people that just don't have the money just don't have the opportunity. So I think it's really interesting, as you said. And I think it's interesting that people that have lesser money now, $500, right? There's people here, you can invest $25 is the minimum you can invest into small businesses. That's just crazy. It just opens up the world for a lot of us to say, where are they getting these returns? Like you said, in emerging markets, and then have the data now to be able to start making those investments. Is that what you're saying?
That is what we're saying. You know, the big caveat to that is that it is because of all this innovation, it is a bit of the Wild West, right? There's a lot of new stuff going on, and not all of it is legit, as we see with the Web3 space and what's happened there. So, you know, there is every time there's innovation, that there comes a little bit more risk and a little bit more of a need to be careful. But I think things are changing. I think there are opportunities for real return that didn't exist even 5 years ago.
So on the investing side, how do we do this? Because investing in other businesses in other countries historically has always been kind of frowned upon by a lot of people in the United States, right? Because of the risk. You invest in them, they run off with your money. There's all these myths and fears that exist, whether substantiated or not. I don't know. But like, how do we get past that? Because this is where the really wealthy people are investing and getting really high returns. So in the United States, how could we have the peace of mind for an average person, whether we're accredited or not, you tell me if that's even possible, to start investing in these emerging markets?
Yeah. So in our model, or my answer is, it's through transparency and data. That's the main reason why. That's the main separation between U.S. investing and emerging market investing, for example. It's the regulated transparency that you have to have in the U.S. Right. So if you look at a financial statement from a company in the US that's been audited, you know that, well, obviously there's still fraud possible, and this still happens. But generally speaking, the data has been vetted through multiple layers. In emerging markets, the provenance of the data, the validity of the data, the quality of the data is suspect. And that's why people say, but just stay away. And part of this is very practical, right? If you're sitting in New York, it's much easier to just go deal with a U.S. company than deal with a Kenyan company where, well, gosh, I'm not even going to go to Kenya, forget that. And so it's that information asymmetry or lack of transparency that prevents us from doing more in emerging markets. And so, you know, we're looking to change that, or at least in a very specific niche, by providing that level of transparency. right? There's a really interesting trend in history that's quite unique, right? There's this digital transformation happening in emerging markets that's to a certain extent has already happened in developed markets, where everything's getting digitized, everything's getting connected to the cloud, everything's getting tracked. In fact, more and more businesses are simply using IoT and digital payments to manage everything. In a way, it's leapfrogging what's happened in the last 100 years in the US. But with all that data being generated, whether it's for managing a motorcycle lease or for a water treatment system or for whatever it is, there's now that data. And so what we're doing is we're capturing all that data, putting into a single database, and using that data to provide unprecedented transparency into how small businesses function, how much money they're making, how much revenue they're generating on the hour, and providing that to investors, both retail investors, individuals, as well as institutional investors. So now they can run their own risk analysis and feel safe about investing in emerging markets.
If we're interested in that, let's say that I'm interested in looking into investing into emerging markets. Jeez, Jim, I don't even know where to start. I don't even know. You know what I'm saying? Like, I don't even know anything about it. I don't know how to invest over there. I don't know how to find the right companies to invest in. I don't know what data I can trust, right? You got countries around this world where all the data, it's just lies, right? Everything that comes out of the media is just lies. So how do we get past all this to get to a level of comfortability to want to invest?
Well, first of all, I think I encourage everyone to visit some of these markets. I think there are a lot of misperceptions about what's happening in a lot of these markets. Even taking a quick vacation to South Africa already helps you get a different perspective of the opportunity. Clearly, what our goal is to offer that opportunity to investors. And so we've created an investment platform that allows investors in the US, accredited investors for the time being, to put their money into a diversified portfolio of small businesses right now. So you mentioned 9,000. That was August. Now we're at close to 12,000 small businesses that we've invested in through our platform. And investors in the US can put, as little as $300 into this platform, and you get a small piece of this very broadly diversified portfolio in, a dozen countries in Africa. And that means that you're getting the nice double-digit yield, or you're getting access to that really high yield coming from these SMEs, but you're not putting all your money in one small business in Kenya. You're putting it across the board. And what we seek to do, and we're getting better at it every day, is to provide all this data to investors so they can assess their own risk. They can understand much better. Oh, okay, my loan or my note that I purchased for Untapped is backed by these revenue streams that I can see online from these small businesses that I can actually get a profile on. And that makes a big difference. So a lot of your listeners might be familiar with Kiva, for example. Well, I think it's interesting because, as a lender to Kiva, you're getting 0% interest. It's not really a financial product. It's a heartstring product. But the narrative and the story and the why there is real. Helping small businesses in emerging markets has a huge impact. What we're trying to do is to realize that inspiration, i.e., you can help somebody, you can help a lot of people, in fact, with just a little bit of money, but you can also get a really nice return at the same time. In fact, even a double-digit return. And we can do that while giving you all this information at the same time, so you can feel safe about where your money is.
Why South Africa?
Oh gosh, we can probably spend another hour on each of the markets and why they're interesting. South Africa is, why is South Africa in particular interesting? South Africa has this interesting history, good and bad, I should say, that straddles both the developed world and the developing world, right? It had this system of apartheid where the whites lived essentially in a first world country. It had the infrastructure, the banking infrastructure, the physical infrastructure, the educational infrastructure of a first world country. And then you had everybody else. Now, in the last 20 plus years, It's merged into a single country. Now that creates its own frictions, but it also creates its own opportunities. Some of the companies in South Africa are really able to bridge this two-sided gap. So there's a company in South Africa, for example, called Where's My Transport? What do? They do mapping. Okay, well, what's the big deal? You know, we have Google Maps here, right? Well, try Google Maps in a developing country. It doesn't work that well. Why? Because the way that Google Maps and how they've captured data on Street View and so on, it doesn't work so well. Not even addresses in many of these countries. But what Where's My Transport has done is they figure out a way to capture mapping data in these type of developing environments, but put it in a data structure and data setting that makes sense for the Google Maps of the world. And so now a company, but if you get somebody in San Francisco doing this, they'll not even understand the problem. But somebody sitting in Cape Town who literally straddles this world understands that problem and can solve it, both in terms of understanding what the problem is, how do we actually do this for an unregistered street in the townships of Cape Town, but also understand the thing that Google Maps needs, the structured data set, so that Google Maps can integrate that data into their database, into their system. So understanding those two sides is really something that I think South Africa excels at. And I think that's where there's a lot of opportunity for the next 30, 40 years, because it's going to be a South African. Well, I mean, the richest person in the world is South African, but it's going to be a South African or a South African company, at least, that can create these solutions that bridge the two sides, developed and developing.
It's really interesting you say that and present it that way, because I never really thought about that. Like, if you think about it, business solves a problem, right? And the more unique problem you can solve, like the bigger the business gets, like an Uber or Airbnb. But you got to think about it. There's so many things in the United States we've already solved. But there's countries like South Africa where they haven't. Like, I don't even think about that stuff. Like, you have a simple example of like Uber can't work in a place where they don't even have the GPS data that's accurate to be able to solve that problem. For us, we don't think about that. Like, Uber exists because GPS data became accessible to normal average day people, right? Something that used to be just used by our military became accessible to all of us. And now we're able to do things like this like this, the geofencing, geo-targeting. There's all these things we're able to do. And Uber's able to play up that. But you don't think about the fact that we've already solved problems and don't think about them. And yet over there, they haven't solved that. And it's not like they're inventing something new. It already works. We've already shown it existed, works. It's just a matter of them bridging that gap from what we already know is here and existed, works, and bringing it to a place and making it work in a whole other geography with massive ability to expand that tech.
You're absolutely right. I'm actually, and I don't want to get too philosophical or too academic on this, but one of the most exciting things I see coming out of emerging markets, in Africa in particular, is this transition from what I call analog peer-to-peer economy, kind of the organic way human society has worked for millennia, going directly to a digital peer-to-peer economy. Now, in the US, what's happened over the last hundreds of years, it's gone from this organic peer-to-peer, analog peer-to-peer, to a centralized economy where we have centralized firms and corporations, centralized governments that manage things. The Coase's theory of the firm. Why does the firm exist? Because you can organize things and manage things better. That's actually changing with digital economy. You can actually manage things better, more efficiently in a decentralized fashion with technology. Well, there's an opportunity for Africa to not disrupt, because it doesn't exist yet, to your point, to go directly from this organic analog world directly to an efficient digital world that is peer-to-peer, skipping the whole centralized phase altogether. I find that the most exciting. So, one of the biggest investment opportunities I see that I regularly invest in are companies who are consolidating through digital tools, fragmented informal markets into singular markets. And that is extremely exciting for me, because there's so much value to be unlocked, so much efficiency to be gained by applying some of these tools.
Jim, interesting stuff. We can go on for a long time because there's two sides to this coin.
Yes, I hope you don't mind, but my family's here, and I'm going to run to a quieter place, but I'll introduce you to my family. This is my wife, Andrea. Hi. Natalia.
Hey, everybody.
Alexis, Lexi. Hi. We're having breakfast.
I want something. That
No,
looks
this is a
good.
live podcast, or not live, I'm sorry, recorded podcast. So hopefully your hundreds of thousands of viewers will see my family.
Hey,
Everybody,
everybody.
you can edit this part out. And this is our cat. Oh, Smokey's running away. Anyway, I'm
Smokey's
going to go
running.
upstairs quickly and
Sounds good. Yeah, we'll wrap up. So, Jim,
podcast.
like I said, we could go on for a long time because there's two sides to what you do. There's the fact that you're making it more accessible than it ever has been to be able to get money to grow a business, and you're using data in a very wise sense to make it easier for those businesses that need money to get it. And the other side is you're allowing us a really unique opportunity to invest the way that very rich people invest and get the kind of returns they get by investing in places where they are, like emerging markets. So like I said, we can go on for a long time, but I want to be conscientious of your time as well. Where can everybody go here watching and learning or listening to be able to learn more?
Yeah, so I encourage everyone to visit us and follow us on online. Our website is at untapped-global.com. And we're also on Twitter and on LinkedIn at Untapped Global, all one word. And we publish articles regularly about what's happening in emerging markets. We also host international investors to places like Cape Town, which I mentioned, and actually do immersive intros of the tech ecosystem there to international investors. So I'm in this for the long term. I'm in this for the next 30 years. And I see the biggest growth in innovation coming from markets like those in Africa. And so I want to be not only there, but also bring my friends and people that I respect into this market so I can show them the opportunities and work with the local markets to build something interesting together.
I love that. Well, Jim, again, thank you so much for coming on. This has been very enlightening today.
Thank you very much, Ty. Thank you for the opportunity.
All right, so listen, if you're listening and watching this, make sure you go to untapped-global.com. That's untapped-global.com. If you go there, you're able to figure out exactly how this works. It's really simple. They've got a lot of information here, a ton of information showing the platform, showing how you can even invest in emerging markets, showing the kind of potential returns you can get, looking in at different projects that have funded, amongst many other things. But this is the future. It just is. And I don't know if you're aware of that or not. I talk about this kind of stuff all the time. And we talk about Kiva on here, and we talk about, the data and the way data is becoming available and the way we're now, coming in on these very specialized funding products. But again, something we never talked about today is how this is impact across the world, right? And how you can be part of that. So if you want a place to put your money, if you want to start investing into other companies worldwide, if you want to see how this kind of technology is not only changing here in the United States, changing in the world, then make sure you go to untapped-global.com. That's untapped, like little dash or hyphen global.com. A lot of great information here. So make sure you go check it out. Untapped-global.com.